Good evening, everyone, and a quick introduction to myself. Whoops, a bit too fast with the mouse there. I joined Rosenblatt Partnership in 2016 with a view to a management buyout of the business with an immediate IPO to pay for the acquisition, which took place in 2018. Previously, I had bought and built the Brands Hatch Leisure Group of Circuits, which sold in 1999 for 52 times earnings, making for investors a 6 to 7 times return. I'm joined tonight by my CFO, Robert Parker, who also has considerable experience in both private and public sector and will be available for Q&A later on. Turning to a summary of the group as it looks today, 3 years post-IPO, we have diversified from being solely a provider of legal services to a provider, of a more diverse professional services, such that the group now has over a third of its profits generated from non-legal services in 2020. This will move to nearer half of our profits coming from non-legal services in 2021. This means the group is not reliant on any one person, any one partner, or any one income driver, and that the profits are fully diversified. Adnitor, shown here for the first time, was a small acquisition of a minority interest, thus importing our IT support team that will see our IT requirements become self-funding over time. I have a team of experienced business leaders, from Barry Roche, who manages the law firm RBL, to Mike Driver and Tetsu Ishikawa. Like myself, Barry is not a lawyer and has commercial experience of building and leading his own businesses, although these have had the benefit of being people businesses in maritime as well as cybersecurity. Mike Driver, who, having used the agency in its former guise to sell his own business, saw the opportunity to do it so much better and acquired the business with the existing partners in 2012, turning it into a specialist sell-side only corporate finance house that, in my view, is one of a kind, advising as it does from a position of real experience. Tetsu Ishikawa is a managing director of Lionfish Litigation Finance, which we launched in May 2020. Tetsu has considerable experience of the litigation funding market, having been at the birth of the industry here in the UK some 10 years ago, and has been instrumental in creating insurance-backed finance to fill the funding gap that exists in this asset class as a result of I'm having real problems because everything's in the way. As a result of overpricing, thus creating affordable litigation finance that promotes early case settlement and faster returns. Much is said about the apparent disadvantages of people-centric businesses, but I passionately believe that it is possible, with the right commercial platform and the right commercial incentives, to house a group of like-minded entrepreneurs to access the benefits of public company ownership and yet still thrive as if they were operating in the private sector, answerable only to themselves. In this respect, I ensure as the group CEO that we employ a light touch in terms of our management and the financial controls we employ to ensure that the entrepreneurial spirit each one of them brings to each subsidiary is given the opportunity to flourish. Turning to our strategy, at the time of our IPO, this was to grow our legal service business organically, whilst at the same time leveraging our expertise and our high success rate of 86% into the highly profitable area of litigation finance. We were able to do using the strength of our balance sheet post-IPO to invest in a select number of cases, either owned or controlled by the Legal Services Division, or through investing in third-party litigation via other law firms. In addition, we wanted to diversify the group into other high-margin, highly profitable, yet quality professional services businesses, but at the right price, obtaining real value for all of our stakeholders. Turning to how we're delivering against that strategy, we have shown in the forecast for 2020 that it was a record year for the legal services business and that we are continuing to increase the capacity of that subsidiary, and we have successfully moved into litigation finance, both through investments in our own client matters and investments via our third-party litigation finance business. The diversification of the group began with the acquisition of Convex Capital at the end of 2019 and will continue with the acquisition of other high-quality professional services businesses in the years to come. Within Rosenblatt, we started with a targeted IPO of utilisation of some 75% of time and 85% of that utilisation. In reality, we have achieved 89% utilisation on 1,500 hours and 106% realisation. That's against an industry average of 70%. We have a monthly heartbeat for the business, which means we're brutally realistic about our WIP and our debtors. Our focus for that business has always been and will remain on profit, cash, and revenue generation. The divisional split of the legal services firm is 62% dispute resolution and very much bent towards the contentious part of our business. Turning then to litigation finance and our approach, I want to touch on our accounting policies, as this is receiving so much attention in the wider financial media. On this slide, we reconfirm our approach to our investments, where we have various limits in place that prevent the group from becoming overexposed to this asset class. In terms of our accounting, we have no alternative but to account under IFRS 9 as a public company, and this requires us to fair value our investments, which we choose to do as close to cash as possible. This means when we look at some of our investments on this slide, where we have given indicative outcomes for some of those investments held by the law firm, they are not in our market forecasts, nor are they marked up in our accounts. They are provided for at cost in our balance sheet, and no revenue is recorded unless received through cash sales for participation rights in those investments or through actual cash returns received on a settlement or a win. I'm a firm believer that the core business should deliver the bread and butter profits for the group, and we forecast those accordingly. These litigation investments remain the icing on our cake, and we would expect to see these bear fruit from Neptune in 2021 through to the others in 2022 and 2023. Moving on to Lionfish, our third-party litigation funder, we have targeted the area of £3 to £5 million claim size, as we believe that this provides a better risk-adjusted return for our investments. If we look at the risk profile of litigation, it remains high risk at the beginning, with no idea if a claim will progress to trial, let alone win or be settled. At this point, the risk is high and the pricing that we apply is high. Unlike our competitors, our pricing then reduces as the risk reduces and the curve lowers. In this, we are unique. If we look at an illustration of our return profiles for this business, assuming we invested 5 million across 10 cases in the bottom right-hand corner of this slide, at a success rate of 85%, as the law firm has so far delivered, Lionfish would expect a return of around 8.75 million over 2 years from those 2 cases. This is an illustration. At the current time, Lionfish has 7 investments at the end of 2020. Moving on to Convex Capital, this was hit very badly as a result of COVID, with a loss of face-to-face meetings and the fact that the sector was not used to doing transactions when nobody had actually met. We have seen the management team rebuild their pipeline completely as it was destroyed last year, as the majority of it was in leisure, travel and other leisure services. As you can see from the right of this slide, they've rebuilt their pipeline in telecom software, professional services, healthcare, and automotive, much of which is now what we consider to be COVID-proof. At the current time, we have 3 deals have completed, and we have announced these. 1 is in exchange, has been exchanged, 1 is in completion mode, and 5 are in financial DD. If we turn to the trading update for 2020, you will see that we closed the year with a resilient performance across the group, together with a stronger balance sheet, showing net cash of 3.5 million, enabling us to issue a 3p dividend that we paid on the 26th of February. We will report our results on the 20th of April 2021. There is no question the timing of the pandemic was hard for many businesses, and we were no exception, as we were on the cusp of delivering on our first acquisition, Convex. But I believe 2020 demonstrated that our profit diversification works. In 2021, we now have a superb foundation to build out all of our businesses, as I hope today's presentation has demonstrated. As our activities deliver, we will have the balance sheet capability to invest in more litigation finance assets, as well as broaden our horizons to the next acquisition. We have a common thread that runs through the businesses we are building of being highly profitable, commercially focused, and entrepreneurial in both leadership and client base. So what are we looking for in our next acquisition? We are looking for the same qualities or businesses that have the potential to deliver those qualities in terms of being commercially aware with cultures that align with our own. And I thank you for taking time to listen to our presentation today when I know there are so many demands on your time and when there is often dread at the thought of another digital meeting or conference. Thank you very much.
Step back, I guess, is Ian Rosenblatt involved in the firm anymore?
Yes, very much so. Ian was the founder of Rosenblatt, the law firm. He remains our senior partner and is primarily engaged on client acquisition and client management.
Which leads nicely to the next one. How many senior fee earners do you have in the legal business?
We have, that was Barry Roche, the MD of Rosenblatt Limited, for anyone who's watched it. We have 20 partners and I think another 5 senior associates, but we have other consultants because we will operate on an hourglass model. For those who've seen my presentations before, we don't run the traditional pyramid model that law firms do, and therefore we bring in consultants in that they can be as high as partners as we need to deliver the deal flow to the business.
And so a lovely question here. How does your experience of running a quoted company compare with running a private company?
I've been very lucky in my life. This is my second time that I've run a public company. Brands Hatch also went public in the 90s. I have run other smaller private companies. There's no question that in private companies you have the freedom to do exactly what you want. But I personally do quite like the challenge of delivering in the public arena. The expectations are high, and I'm one of those people that works to high standards myself and have high expectations, don't I, Robert? How do you find it working in the public sector versus the private sector?
I don't see any different, really. I think our standards are both across all private and well as public businesses as well. So, personally, I don't see any difference in the two.
And since the float, do you think the market understands the legal services sector, or could it be argued that ownership could be better suited to the longer term cash flows the business generates? Other kind of private owners could see that without having to work for the next results, the next update. I don't know if that makes sense as a question or just a comment.
It's a bit of a confusing question, but I think one of the interesting things about the legal services sector is that it's very good for yield. Obviously, the lawyers are brought up within that private sector, having to earn their keep and earn their bread and butter. So that means that it makes businesses like these very good for yield, and in my opinion, very good for dividend flow. Robert, would you agree?
Yes, yeah. I'm not quite sure whether the legal sector is fully understood yet. I think of all the listed peers are all very different, but as that gets added to, I think there will become a greater understanding of that sector. It needs some more people within the listed environment.
Next question is on litigation finance. How do you source litigation finance claims, and how do you ensure prospects are accurately assessed at the start?
I have to say most litigation finance claims arrive on our doorstep by referral from insurance brokers or counsel or people who have been referring them in for funding. As a result, most claims need to have adverse cost protection. That's known as ATE in our business. And as a result, there's an insurer involved as well. So quite often these claims get reviewed by 2 different legal processes, our own, which is backed by Rosenblatt's, and the insurer's own legal team. So there's quite a strong underwriting process involved. And we also have various, restrictions of our own. For instance, we only fund claims within the UK jurisdiction or that run under UK law. And so quite a lot get rejected at a very early stage. And last year, 96% was rejected.
A question, have you left the Manolete marketplace? I think differentiate your approach to theirs.
Manolete operate by buying claims that are often small claims in the insolvency market, often against owner-director businesses, and they tend to be small in claim size and high in volume. That's their business model. We don't. We do that, but we don't do very much of it. Islero, our insolvency product, is looking for the higher value claims. So if you were to look at Manolete, they are carrying hundreds of investments on their book, whereas we're carrying 7. So our investment ranges, tends to be the larger claim size. So we're not a direct competitor of Manolete, although we have used Islero as a marketing tool to leverage off the back of their market position.
And if you decided an acquisition required more capital via an equity placing, would you offer private investors the opportunity to participate?
That's a very, very good question. Would we? Robert, what do you think? I have to be honest, we haven't considered that. And I'm not sure if there is a technical answer that the Nomad would need to give us over that. But
I think there's a more general point, Nicky. At the current share price, we believe the business is undervalued.
Well, that's definitely the case. We would not do a fundraise at this price, and it's one of the reasons why we haven't raised money. But if it was technically possible and we were allowed to offer it to retail investors, we would.
A question here about a comment about Brexit. I think you used the phrase Brexit Proof on the Convex business, and someone's just asked to substantiate that, please.
I think that might have been on a slide actually. I used COVID proof as the it's a Brexit hedge.
It was. I'm terribly sorry. Yeah.
The Brexit hedge. Yes. Yes. So we have got a number of deals and a number of clients on that we're advising within Europe. Not entirely sure what Mike meant by that point. Do you know, Robert?
No, I think fundamentally was that we could do business in the UK and in Europe, which we have done with Convex in its history.
Yeah.
Okay.
Yeah.
And trying to keep that entrepreneurial spirit, you mentioned the different businesses being run with that. As you grow and acquire, how do you keep the culture?
That's really important, and what I believe in, because my background is that my father built a multinational business that was enormous, and I spent much of my youth doing business experience in that business. And I think one of the ways that we're seeking to do it is by keeping the management teams intact. So a lot of these businesses have been built by entrepreneurial owner managers, and making sure that they have the power to continue to deliver the culture of that business is really, really important. And I think that's how you do it. So you're effectively providing an umbrella for them rather than trying to integrate them into your own culture. And I would even go as far as to say that the group headquarters has its own culture as well. And therefore, and everyone is able to thrive within their own environment. That's what we're trying to produce.
Question here: RBL, Lionfish, and Islero, if I'm pronouncing that correctly, seem closely correlated, requiring similar expertise. How does Convex fit? Aside from Convex being a strong generator of cash that can be recycled into selective litigation investments, what operational synergies has it brought to the group and its bottom line to date?
With the obvious exception of being fee referral, because obviously all of Convex deals require legal advice, and there's a potential, depending on what their level of fee generation is, their deal flow, there's a potential 1 to 2 million of legal fees available there for us to take through Rosenblatt. The other side that is rarely understood is that each of these businesses has a common theme. It's very entrepreneurial. So Convex is obviously advising entrepreneur, owner-managed clients. RBL's predominant client base is entrepreneurs and high net worth individuals. Litigation finance tends to be high net worth entrepreneurs bringing litigation. So there is a bit of a common theme there, and if all of our clients are very similar, and there's quite a lot of cross referrals. So some of Mike's clients who've sold businesses are investors in our litigation finance business, and so on. So there's actually more of a common theme behind the scenes than might be on first appear obvious on face value.
Thank you. You mentioned you believe the share is undervalued. What evidence do you have of this, and how much undervalued? To answer, I guess, within the limits of what you can say, and that's a question.
There you go, Robert. Over to you.
I think if you read it,
I'll be too vocal.
Yeah, I think if you look at some of the analyst reports, we're at a discount to the other peer groups within the market. So we trade at a discount. And I would say if you compare us peer to peer, we are the most profitable and the highest EBITDA margin across all the peers within that sector. And I think the analyst report focused towards more of a share price of around £1.20. So within that boundary of what we can say, I think that covers that, I think.
A question here about the dividend. Commenter said, dividend being paid on the 26th of February. Do you know when you went ex-divvy?
Oh,
6th of Feb, I think, was it?
I did know. I can't remember.
6th of Feb, you thought?
Yes. Yeah.
Yeah. And the dividend policy, is there a progressive policy?
Yeah. Robert, do you want to do that one as well?
Yeah, I think when Nicky IPO'd the business, it was always under a strategy that we wanted to distribute 60% of profits available for distribution. So there's a key driver to that, you know. So that's the strategy. I think that's what we've been trying to achieve since we've been IPO'd.
Okay, and the questioner who asked about the synergies from Convex has followed up to ask if any of those cross referrals have led to actual billings.
Yes, we did. Yes, we have. Yes, we had one last year, which, considering they only did 2 deals, was quite a good rate.
That's lovely. Well, thank you very much for coming and joining us this evening.